Stock market volatility has been making headlines recently with talk of a possible recession coming. So what should you do with your money? Financial professional Charlie Bowers of Insight Folios here this morning with some advice on how to handle market uncertainty and tell us exactly what to do with our money and exactly when the recession could come. Charlie, thanks for coming in.
You might be setting the bar a little high, Paige. I'm not sure.
I'm being a little sarcastic there, of course, but you know, it's in the headlines every day because of the media. We're reporting on what's going on, of course, with the economy, and it makes everyone go, should I be freaking out? So who should be freaking out? A lot of this depends on how old you are, how close to retirement. I know you're going to say nobody should freak out, but let's break it down for folks in terms of where you are and really what you should maybe be doing or not doing.
This is something that the financial world really terms in terms of aggressive versus conservative investors. So the farther away from retirement you are, the more aggressive. What does aggressive mean? In our world, it kind of means you're in the market. So you're going to see all that volatility. The farther away you are, the more volatility you can handle. And the S&P over a long period of time has averaged about 10%, so that's understandable. Conservative, the closer you are to retirement, well, let's take some of that volatility off the table and maybe put you in bonds. But at Insight Folios, we really don't look at it like that because conservative, aggressive, you need income. You want your income completely covered if you want to get away from the emotional impact of the market volatility. And we say the farther away you are from retirement, the more growth-oriented you can be.
Sure.
There's that 10% a year. The closer to retirement, the more income-oriented. Because once you know you have your income secure, that market volatility doesn't bother you nearly as much as it typically does most.
And you're speaking from a professional standpoint, of course.
Sure.
For a lot of people, unless you somehow have a financial background yourself, hopefully you have someone who is able to kind of advise you and help you with that. For people who, you know, depending on how involved you are or aren't in your finances, people can tend to overreact a bit.
They really can, but I think it depends on how they're invested. If they don't have any confidence in their investments, if they don't know where their income's coming from, sure, they're going to be really worried about market variability. And I'll tell you a quick story. My wife is an only child, and a number of years back, their parents had issues, and we thought we ought to get them closer to us. And she was going through a number of senior living facilities, noticing that we're remodeling all of them. Finally asked one of the directors, what's going on? Well, we're having to make our small apartments smaller because when the market turned down in 2008, most people could not afford the apartments as they were. We had to make them smaller so that more people could afford them. And you see that gentleman over there in the wheelchair, he can't afford the smaller apartment. He has to go home and live with his kids. No one at that stage of life should be in that situation, and that's a reflection on how they were invested.
Right, and that's what we're trying to avoid, of course,
what we want to
for
avoid.
Anyone. Now, you mentioned 2008, and of course, that's the concern that we're going to be facing another market like that here with everybody talking about a possible recession.
Are you asking for the specific date again?
Well, I know you can't do that, but what are, you know,
There's going to be a recession. There's going to be a bear market. We don't know when, but typically right after that bear market, there's a bull market that runs a whole lot longer than the bear market. So if you've got your income covered through that bear market, you're going to be okay.
Then you'll be all right. Yeah. All right, Charlie Bowers, we'll take your word for it. Thank you so much for coming in. Always love to have you, and we hope that you'll come back.
I'll be here.
Thank you so much.